Let's be real for a second. Do your finances feel chaotic, a little out of control? Well, what if I told you that in the next few minutes, we're going to walk through a 90-day plan to take you from that chaos to total confidence? Let's get right into it. You know, this quote from Humphrey Yang just hits the nail on the head. The biggest hurdle for most of us isn't some crazy complex math equation. It's just that we don't have a simple roadmap to follow. And that's exactly what we're going to build today. So here's our game plan for this 90-day reset. We're breaking it down into a few key parts. We'll start by getting a crystal clear picture of your finances. Then we'll build a system to automate your success. After that, we level up and focus on growth. And finally, we'll look ahead to your long-term future. Okay, let's dive in. Phase 1 is all about knowing your numbers. You can't fix what you can't see, right? So for the first 2 weeks, we are doing a deep dive, a full-on financial audit. This is where we need a little mindset shift. I want you to start thinking of yourself as you incorporated. Seriously, any successful business knows its numbers inside and out. Your income, that's your revenue. Your spending, those are your expenses. And your savings, well, that's your net profit. So for week 1, your mission is pretty straightforward. You're going to pull your last 3 months of bank and credit card statements. Then you'll go through them line by line. Yep. Every single one, and categorize your spending. The goal is just to find out what your average monthly spending looks like in each area. And listen, when you're done, your breakdown might look something like this. And seeing it all in black and white, it can be a real shock. Maybe it's the 225 bucks on Ubers or the 300 on shopping that just jumps out at you. But remember, this isn't about guilt. It's about clarity. Now we get to week 2. It's time to trim the fat. Look at that list you just made and ask yourself the tough question. Where can I cut back? I mean, your rent is probably fixed, sure, but things like subscriptions, eating out, ride sharing, those are usually pretty easy targets. And if you think small changes don't really matter, think again. Cutting just $400 a month frees up almost $5,000 in a single year. That's a huge deal. That could be a dream vacation, a major debt payment, or a serious boost to your investments. Okay, now that we have a real handle on our spending, it's time to move into phase 2. Over the next few weeks, we're going to build a system that makes saving and investing pretty much effortless. This right here is the golden rule of personal finance. Pay yourself first. What does that mean? It means before a single dollar goes to rent, bills, or anything else, you automatically move money into your savings and investments. It's out of sight, out of mind, and into your future. By week 5, we're aiming for a huge milestone, building a $1,000 starter emergency fund. This isn't just about having cash in the bank. It's a psychological safety net. It gives you breathing room when life, inevitably throws a curveball your way. And why is that $1,000 so critical? Because a staggering 59% of Americans can't cover an unexpected expense of that size. By hitting this goal, you're not just building a safety net, you're putting yourself in a much more financially secure position than most people. Then in week 6, our focus shifts to building real wealth. And if you look at the average returns over the last century, it's pretty clear that stocks have historically been the most powerful engine for long-term growth. Why? Because when you own stocks, you own a tiny piece of actual growing companies. That's how you really make your money work for you. And this is where the magic happens. It's called compounding, and it's basically the 8th wonder of the world. Just look at these numbers. Consistently investing $500 a month could turn into nearly $750,000 over 30 years. It's not about being a genius and timing the market. It's just about time in the market. Okay, on to our final phase, level up. From weeks 7 to 12, we're officially switching from financial defense to financial offense. You've built a solid foundation, and now it's time to really accelerate your growth. Look, there's a hard limit to how much you can cut and save. But you know what doesn't have a limit? Your potential to earn more. So in week 7, we focus on boosting your income. Pick one of these and just go for it. Ask for that raise, start a side hustle, or learn a new high-demand skill. Credit cards. Are they a powerful tool or a dangerous trap? Well, it depends on how you use them. If you pay your balance in full every single month, they're an amazing tool to build credit and earn rewards. But if you carry a balance, you're just feeding a monster with interest rates that can be over 20%. You have to know which side of that sword you're on. So you want to build good credit? It's way simpler than you probably think. As you can see here, the single biggest factor by far is your payment history. That's it. Just pay your bills on time every single time.
That is the secret. Ultimately, everything we've talked about really boils down to this one number, your net worth. It's like your financial report card. And the formula is super simple. It's just what you own minus what you owe. Tracking this number over time is the absolute best way to measure your progress.
We've covered a ton of ground in these 90 days, but this is really just the beginning. Now it's time for the most exciting part, actually planning the financial future you want. So it's time to dream big, but with a concrete plan. Actually write down your financial goals for the next 1, 5, and 10 years. Then work backward and break those big goals down into smaller, achievable steps. And please don't forget to schedule regular check-ins to keep yourself accountable. This 90-day reset has given you the tools, the system, and the mindset to take back control of your money. But it's not the end of the journey. It's the launch pad. The real question is, what will your financial story look like 5 years from now?